Good morning. Welcome to Market Monday. You may notice something different this week. We're changing things up at Market Monday. By now you've probably heard that AI, or artificial intelligence, is all the rage. In fact, it's become so advanced that an AI-generated humanoid was able to replace Chad and Nat. So long, fellas. To that point, let's get right into it. First up, let's talk about house prices. According to recent reports, house prices have continued to rise across the country, with some areas seeing double-digit growth. This has been driven by a combination of low interest rates and high demand from buyers. Next, let's talk about supply chain issues. As we've been reporting for several weeks now, supply chain disruptions continue to impact businesses across the country. From shipping delays to shortages of raw materials, these issues are causing headaches for many companies.
Wait a minute, you don't really want to trade us in for artificial intelligence, do you? Do you? It's true, AI is taking the world by storm. And by AI, we're referring to some sort of computer or software's ability to think and act like a human. It could be competing in chess, creative writing like poetry or song lyrics, even software and complex analytics. And in many cases, it's remarkable. But is it ready to completely take over and boot us out of these chairs for good?
Let's have a look. We asked ChatGPT, which is now integrated with Microsoft's Bing search engine, you can go check it out at bing.com, to write a 5-minute video script covering the most important economic and market topics over the past week. Here's the actual request. It asked us to clarify the topics, and we responded with housing prices, consumer confidence, and the supply chain.
And here's the response. Let's dive in. Housing prices. According to AI, housing prices continue to rise, double digits in some markets. But is that really the case? Actually, the insight from the past week is that we're finally beginning to see housing prices fall. That's right. In fact, house prices are reversing lower over the past 3 months at an annualized rate of minus 5.2%. Now, going back 30 years, that rate of declining prices was only seen during the global financial crisis.
To be fair, home prices are still quite high. Here's a look at the current drawdown in home prices right here, compared to the 2008 global financial crisis. Small in comparison, but still a decline that we're just now starting to see. And here's one last look at falling home prices on a month-to-month basis, clearly not continuing to rise as AI reported. You don't really want to get rid of us yet, do you?
And what about rates? AI stated low interest rates as a reason for increasing home prices. Rates are at 15-year highs. Wouldn't exactly call that low rates. We see 3 major trends affecting housing. 1, if you're a homeowner interested in selling your house, and 2 months ago you saw a high, artificially high, value for your home, and now you see a low value, that's not an easy pill to swallow, even if the current more accurate price is way higher than, say, 2 years ago. That's our human nature. 2, high, not low, rates have significantly increased the monthly payment, causing homeownership to be out of reach or much less attractive to would-be homebuyers. And 3, the majority of current outstanding mortgages in the US have rates below 3 or 4%. So not only would those folks be giving up an extremely low rate and switch to something that's much higher, they'd also have to buy a house at a price that screamed higher over the past few years. Clearly, we disagree with AI on housing.
Now let's look at supply chain issues. AI reports several supply chain challenges, delays, shortages. What we see, as we've been reporting for some time now, is actually the opposite. Global shipping rates continue trending down, right back down to pre-COVID levels. I mean, didn't we talk about this just last week? Maybe AI should be training itself on us. Just a thought. Idle capacity in blue. You see all this idle capacity during COVID and even last year. Now basically none, reflecting a smooth and efficient supply chain.
All right, well, despite its amazing potential, it looks like, at least for now, AI isn't quite ready for prime time. While nobody, including ourselves, want to be replaced by artificial intelligence, admittedly, we were a little disappointed that AI wasn't able to identify the nuance in most recent developments over the past week. But in fact, this is how AI works. It trains itself on the past, and we expect the speed at which it does train itself to increase rapidly. So let's be careful what we wish for.
We look forward to following AI's progress and incorporating it to serve you better. Thanks for watching. Have a great week.